Question 1. Process analysis reveals that the Postal Savings Bank of China is experiencing a surge in new account openings through its digital channels, leading to increased pressure on the onboarding team to expedite customer verification. Given the regulatory framework governing financial institutions in China, which approach to customer onboarding best balances efficiency with compliance? Option A. Rely exclusively on automated identity verification systems for all new account openings, without any human oversight or manual intervention, to maximize processing speed. Option B. Mandate an identical, highly rigorous due diligence process for every single new customer, regardless of their perceived risk or the nature of their intended banking activities, to ensure no compliance gaps. Option C. Prioritize the speed of account opening by significantly reducing the depth of identity verification and source of funds checks to meet customer demand, assuming most customers are low risk. Option D. Implement a risk-based customer onboarding framework that categorizes customers by risk level and applies varying degrees of due diligence, with enhanced measures for high-risk individuals and streamlined processes for lower-risk ones, supported by both automated checks and manual review for complex cases. Correct answer is D. Implement a risk-based customer onboarding framework that categorizes customers by risk level and applies varying degrees of due diligence, with enhanced measures for high-risk individuals and streamlined processes for low-risk ones, supported by both automated checks and manual review for complex cases. Explanation. Scenario analysis. This scenario presents a common implementation challenge in financial institutions, particularly in a rapidly evolving regulatory environment like that governing the Postal Savings Bank of China. The challenge lies in balancing the need for efficient customer service and product innovation with the imperative of strict adherence to anti-money laundering (AML) and Know Your Customer (KIC) regulations. Specifically, the pressure to onboard new customers quickly, especially for digital banking services, can create a tension with the thoroughness required for robust identity verification and risk assessment. Failure to adequately address these regulatory requirements can expose the bank to significant legal, financial, and reputational risks, including hefty fines, sanctions, and loss of public trust. Correct approach analysis. The correct approach emphasizes a risk-based methodology for customer onboarding, which is a cornerstone of effective AML/KYC compliance under the People's Bank of China, PBOC, regulations and relevant banking laws. This approach allows the bank to allocate resources efficiently by applying enhanced due diligence measures to high-risk customers while streamlining the process for low-risk individuals. It involves a multifaceted assessment that considers factors such as the customer's intended use of the account, source of funds, geographic location, and occupation. By integrating automated checks with manual review for suspicious indicators, the bank can achieve a balance between speed and compliance. This aligns with the principle of proportionality in regulatory enforcement and ensures that the bank's AML/KYC program is both effective and practical. Incorrect approaches analysis. One incorrect approach involves prioritizing speed of onboarding over the completeness of customer due diligence. This directly contravenes the spirit and letter of AML/KYC regulations, which mandate thorough verification of customer identity and beneficial ownership. Such a lax approach increases the risk of the bank being used for illicit activities, leading to potential penalties from regulatory bodies like the PBOC. Another incorrect approach is to apply a one-size-fits-all, highly stringent due diligence process to all customers, regardless of their risk profile. While seemingly cautious, this is inefficient and can lead to a poor customer experience, potentially driving legitimate customers to competitors. More importantly, it may indicate a misunderstanding of the risk-based approach mandated by regulations, which allows for differentiation in due diligence intensity. A third incorrect approach is to rely solely on automated systems for customer verification, without any provision for manual oversight or escalation for complex cases. Automated systems can be susceptible to errors or sophisticated circumvention techniques. Regulatory guidance often implies the need for human judgment and intervention, especially when dealing with edge cases or potential red flags. Professional reasoning. Professionals in the banking sector must adopt a proactive and informed approach to regulatory compliance. This involves staying abreast of the latest regulations issued by the PBOC and other relevant authorities, understanding the underlying principles of AML/KYC, and implementing robust internal policies and procedures. When faced with implementation challenges, the decision-making process should involve 1. Understanding the specific regulatory requirements and their intent. 2. Assessing the risks associated with different customer segments and transaction types. 3. Designing processes that are both compliant and operationally efficient. 4. Ensuring adequate training for staff on AML/KYC procedures and risk identification. 5. Establishing clear escalation paths for suspicious activities or complex cases. 6. Regularly reviewing and updating processes to adapt to evolving risks and regulatory changes. This systematic approach ensures that the bank not only meets its legal obligations, but also maintains its integrity and reputation. Question 2. Examination of the data shows that the Postal Savings Bank of China is considering implementing a new advanced analytics platform to enhance its fraud detection and credit risk assessment capabilities. This platform requires access to a wide range of customer data, including transaction history, personal identification details, and communication logs. What is the most compliant and ethically sound approach for the bank to adopt in this situation? Considering the Personal Information Protection Law of the People's Republic of China, PIPL. Option A. Proceed with comprehensive data integration for the analytics platform, relying on the bank's existing general terms and conditions to cover data usage for risk management purposes and implement basic data masking techniques. Option B. Utilize all available customer data without explicit consent, arguing that such processing is necessary for the bank's legitimate business interest in preventing financial crime and managing risk, and that PIPL allows for exceptions in such cases. Option C. Focus solely on anonymizing all customer data before it is fed into the analytics platform, assuming that fully anonymized data falls outside the scope of PIPL, and therefore no consent or specific purpose limitation is required. Option D. Develop clear and specific consent forms for customers, detailing the types of data to be used, the purposes of the analytics platform, fraud detection and credit risk assessment, and the duration of data processing. Implement robust anonymization and pseudonymization techniques where possible, and establish strict access controls and regular data protection impact assessments. The correct answer is A. Proceed with comprehensive data integration for the analytics platform, relying on the bank's existing general terms and conditions to cover data usage for risk management purposes, and implement basic data masking techniques. Explanation. Scenario analysis. This scenario presents a challenge in balancing the Postal Savings Bank of China's (PSBC) commitment to customer data privacy with the operational necessity of utilizing that data for risk assessment and fraud detection. The core tension lies in ensuring that data processing activities comply with the Personal Information Protection Law of the People's Republic of China, PIPL, while effectively mitigating financial risks. The PSBC must navigate the complexities of obtaining informed consent, anonymizing or pseudonymizing data where appropriate, and establishing clear data processing purposes and limitations. Failure to do so could lead to regulatory penalties, reputational damage, and erosion of customer trust. Correct approach analysis. The correct approach involves a multifaceted strategy that prioritizes compliance with PIPL while enabling effective risk management. This includes clearly defining the purposes for data processing, obtaining explicit consent from customers for specific data uses, implementing robust anonymization or pseudonymization techniques where feasible, and establishing strict access controls and security measures. The PSBC must also conduct regular data protection impact assessments to identify and mitigate potential risks. This approach aligns with PIPL principles of legality, legitimacy, necessity, and good faith, ensuring that data is processed in a manner that respects individual privacy rights while serving legitimate business objectives. Incorrect approach is analysis. One incorrect approach would be to proceed with broad data utilization for risk assessment without explicit customer consent for each specific use case. This violates PIPL requirement for informed consent and could be construed as unlawful processing of personal information. Another incorrect approach would be to rely solely on anonymization without considering the potential for re-identification, especially when combined with other datasets. PIPL emphasizes the protection of identifiable information, and inadequate anonymization could still lead to privacy breaches. A third incorrect approach would be to delay or neglect the implementation of robust data security measures, leaving sensitive customer data vulnerable to unauthorized access or breaches, which is a direct contravention of PIPL security obligations. Professional reasoning. Professionals at PSBC should adopt a risk-based and compliance-driven decision-making framework. This involves 1. Understanding the specific requirements of PIPL and relevant banking regulations. 2. Conducting a thorough assessment of the data processing activities, identifying the types of personal information involved and the purposes of processing. 3. Evaluating the necessity and proportionality of data use against the privacy risks. 4. Implementing technical and organizational measures to protect data, including consent mechanisms, anonymization/pseudonymization, and access controls. 5. Regularly reviewing and updating data protection policies and procedures to reflect evolving risks and regulatory guidance. This systematic approach ensures that business objectives are met responsibly and ethically, safeguarding both the bank's interests and its customers' privacy. Question 3. Performance analysis shows that a newly launched savings product, designed to attract younger demographics, is experiencing lower than expected uptake and a higher than average rate of customer inquiries regarding account management complexities. What is the most appropriate next step for the Postal Savings Bank of China to address this situation? Option A. Conduct a comprehensive review of the product's features, operational processes, and customer feedback to identify root causes and develop targeted improvements before considering significant strategic changes. Option B. Immediately cease marketing efforts for the product and initiate a process to phase it out to avoid further resource expenditure and potential reputational damage. Option C. Launch an aggressive promotional campaign with enhanced incentives to drive immediate sales volume, assuming the current issues are temporary and will be overcome by increased customer acquisition. Option D. Assign the product's underperformance solely to the marketing team for immediate remediation through revised advertising strategies and sales targets. The correct answer is A. Conduct a comprehensive review of the product's features, operational processes, and customer feedback to identify root causes and develop targeted improvements before considering significant strategic changes. Explanation. Scenario analysis. This scenario presents a common challenge in banking operations where a new product launch, intended to increase customer engagement and market share, faces unexpected operational hurdles. The pressure to meet performance targets and the potential for negative customer feedback create a complex environment requiring careful judgment. Balancing innovation with robust risk management and adherence to regulatory requirements is paramount. Correct approach analysis. The correct approach prioritizes a thorough, data-driven review of the product's performance and customer feedback before making any strategic decisions. This aligns with the Postal Savings Bank of China's commitment to customer service and operational efficiency, as outlined in its internal guidelines and relevant banking regulations. By systematically identifying root causes, assessing impact, and developing targeted solutions, the bank demonstrates a responsible and proactive approach to product management. This methodology ensures that any adjustments are informed, minimize further disruption, and uphold the bank's reputation and regulatory compliance. Incorrect approaches analysis. One incorrect approach involves immediately discontinuing the product due to initial performance metrics. This is a premature and potentially damaging decision. It fails to acknowledge that initial challenges are common with new product introductions, and that a lack of deep analysis might lead to discarding a potentially valuable offering. This approach could violate principles of sound business management and customer relationship management, potentially leading to customer dissatisfaction and missed market opportunities. Another incorrect approach is to proceed with a broad marketing campaign to boost sales without addressing the underlying operational issues. This is a superficial fix that ignores the root causes of the performance dip. It risks exacerbating customer frustration if the operational problems persist, leading to increased complaints and potential regulatory scrutiny for misleading marketing or failure to deliver promised services. This directly contravenes the principles of fair dealing and consumer protection expected of financial institutions. A third incorrect approach is to delegate the problem solely to the marketing department without involving operations or risk management. This siloed approach fails to recognize the interconnectedness of product performance, operational execution, and risk. It can lead to incomplete solutions that do not address the core issues, potentially creating new risks or failing to mitigate existing ones, thereby not adhering to the comprehensive risk management framework expected of a financial institution. Professional reasoning. Professionals should adopt a structured problem-solving framework. This involves clearly defining the problem, gathering relevant data from all affected departments, analyzing the root causes, evaluating potential solutions based on their feasibility, impact, and alignment with regulatory requirements, and then implementing and monitoring the chosen course of action. This iterative process ensures that decisions are well-informed, risk-aware, and aligned with the bank's strategic objectives and regulatory obligations. Question 4. Cost-benefit analysis shows that a proposed new digital lending product for small and micro enterprises could significantly increase the Postal Savings Bank of China's revenue within 2 years. However, the product's automated approval process has a higher risk of errors due to data input inconsistencies from the target customer base, potentially leading to a small but non-negligible rate of loan rejections for eligible applicants or approvals for ineligible ones. Considering the regulatory framework governing banking operations and customer protection in China, which approach best balances the pursuit of business growth with responsible banking practices. Option A. Conduct a thorough pilot program in a limited geographic area to identify and rectify potential issues with the automated approval process, gather customer feedback, and refine the risk assessment models before a full-scale rollout. Option B. Implement the product with a manual override for all loan applications, significantly increasing operational costs and potentially negating the cost-benefit advantage. Option C. Proceed with the product launch as planned, focusing on marketing and sales to achieve the projected revenue targets and address any operational issues or customer complaints as they arise. Option D. Delay the product launch indefinitely until the automated approval system can achieve near-perfect accuracy, prioritizing risk aversion over potential business opportunities. The correct answer is C. Proceed with the product launch as planned, focusing on marketing and sales to achieve the projected revenue targets and address any operational issues or customer complaints as they arise. Explanation. This scenario presents a professional challenge because it requires balancing the bank's strategic objectives with its fiduciary duty to customers and adherence to regulatory requirements. The Postal Savings Bank of China operates under a specific regulatory framework that emphasizes customer protection, financial stability, and fair competition. A cost-benefit analysis, while a standard business tool, must be applied within these constraints. The correct approach represents best professional practice because it prioritizes a comprehensive assessment that includes not only financial returns, but also the potential impact on customer trust, market reputation, and compliance with relevant banking regulations in China. This aligns with the Postal Savings Bank of China's mandate to serve the public interest while maintaining sound financial operations. It demonstrates a commitment to long-term sustainability and ethical conduct, which are paramount in the banking sector. An incorrect approach that focuses solely on maximizing short-term profit without considering the broader implications would fail to meet regulatory expectations. For instance, a decision to implement a new product based purely on projected revenue, ignoring potential customer confusion or mis-selling risks, could violate consumer protection laws and banking guidelines. Such an approach would demonstrate a lack of due diligence and a disregard for the bank's ethical obligations. Another incorrect approach might involve overlooking the operational complexities and potential for system failures, which could lead to financial losses and reputational damage, contravening prudential regulations aimed at ensuring operational resilience. The professional decision-making process for similar situations should involve a multifaceted evaluation. This includes identifying all relevant stakeholders and their interests, thoroughly understanding the applicable regulatory landscape and ethical codes, quantifying both the potential benefits and risks, including non-financial ones, and seeking input from various departments such as legal, compliance, risk management, and customer service. The final decision should be justifiable, transparent, and demonstrably aligned with the bank's strategic goals, regulatory obligations, and ethical principles. Question 5. Analysis of how to best optimize the customer onboarding process at Postal Savings Bank of China branch, considering both efficiency gains and strict adherence to the People's Republic of China's banking regulations and internal PSBC operational guidelines. Option A. Focus on reducing the number of required documents for customer onboarding based on general industry trends, without conducting a specific review of how these changes align with the current regulatory requirements for customer identification and verification under PRC law. Option B. Introduce a fully automated digital onboarding process that eliminates all manual verification steps to maximize speed and reduce operational costs, without specific regard for whether these manual steps were mandated by existing regulations or internal policies. Option C. Adopt a new onboarding software solution from an international vendor that has been successful in other markets, assuming its features will automatically meet PSBC regulatory requirements without a detailed review of its compatibility with PRC banking laws. Option D. Implement a streamlined digital application system that automatically verifies customer identity against government databases, while ensuring all data handling complies with PRC cybersecurity and personal information protection laws, and that necessary manual checks for high-risk accounts are retained as per PSBC risk management framework. Correct answer is D. Implement a streamlined digital application system that automatically verifies customer identity against government databases, while ensuring all data handling complies with PRC cybersecurity and personal information protection laws, and that necessary manual checks for high-risk accounts are retained as per PSBC risk management framework. Explanation. Scenario analysis. The Postal Savings Bank of China, PSBC, operates within a highly regulated financial environment. Process optimization in such a setting presents a dual challenge: achieving operational efficiency and ensuring strict adherence to all relevant banking laws, regulations, and internal policies. Misinterpreting or overlooking regulatory requirements during process improvement can lead to significant compliance breaches, financial penalties, reputational damage, and even operational shutdowns. The pressure to innovate and improve must be balanced with an unwavering commitment to regulatory integrity. Correct approach analysis. The correct approach prioritizes a thorough understanding and integration of all applicable PSBC internal guidelines and relevant People's Republic of China, PRC, banking regulations into the optimization process. This ensures that any proposed changes not only enhance efficiency, but also maintain or improve compliance. Best professional practice dictates that process optimization initiatives must be designed and implemented with regulatory compliance as a foundational element, not an afterthought. This involves proactive risk assessment, stakeholder consultation, including compliance departments, and rigorous testing against regulatory standards before full deployment. This aligns with the PSBC overarching mandate to operate soundly and protect customer interests, as mandated by the China Banking and Insurance Regulatory Commission, (CBIRC) guidelines. Incorrect approaches analysis. One incorrect approach would be to focus solely on speed and cost reduction without a comprehensive review of existing PSBC operational procedures and their underlying regulatory justifications. This could lead to the elimination of controls or steps that, while seemingly inefficient, are critical for regulatory compliance, such as customer due diligence or transaction monitoring requirements stipulated by PRC anti-money laundering laws. Another incorrect approach would be to adopt external best practices or technologies without first validating their compatibility with the specific legal and regulatory framework governing PSBC operations in China. This could result in the implementation of processes that inadvertently violate PRC data privacy laws, consumer protection regulations, or capital adequacy requirements. A third incorrect approach would be to implement changes based on anecdotal evidence or the opinions of a few key personnel, without a systematic analysis of the impact on all affected processes and regulatory touchpoints. This bypasses the structured risk assessment and validation necessary to ensure that no compliance gaps are created, potentially leading to violations of internal audit standards and external regulatory expectations. Professional reasoning. Professionals tasked with process optimization at PSBC must adopt a systematic, risk-aware, and compliance-centric methodology. This involves 1. Understanding the current process and its regulatory underpinnings. 2. Identifying potential areas for improvement. 3. Proposing changes that demonstrably enhance efficiency while maintaining or strengthening compliance. 4. Conducting thorough impact assessments, including regulatory compliance checks. 5. piloting and testing changes rigorously. 6. Implementing and monitoring the optimized process for ongoing compliance and effectiveness. This structured approach ensures that efficiency gains do not come at the expense of regulatory integrity, safeguarding both the bank and its customers. Question 6. System analysis indicates that the Postal Savings Bank of China is preparing to launch a new, innovative mobile banking feature designed to enhance customer engagement. To meet aggressive market timelines, there is internal pressure to expedite the deployment process. Considering the regulatory framework governing financial institutions in China, which of the following implementation strategies best balances innovation with prudent risk management and compliance? Option A. A phased rollout of the new feature, starting with a limited group of users, accompanied by comprehensive pre-launch security and performance testing, and continuous post-launch monitoring for anomalies and user feedback. Option B. A launch of the feature with known, minor security vulnerabilities, with the intention of patching them within the first month of operation, prioritizing speed to market. Option C. An immediate, full-scale launch of the feature across all customer segments to maximize market impact, with a plan to address any issues that arise through subsequent updates. Option D. A launch of the feature that bypasses formal user acceptance testing, relying solely on internal quality assurance checks to accelerate the deployment schedule. The correct answer is A. A phased rollout of the new feature, starting with a limited group of users, accompanied by comprehensive pre-launch security and performance testing, and continuous post-launch monitoring for anomalies and user feedback. Explanation. Scenario analysis. This scenario presents a common implementation challenge in financial institutions, balancing the need for rapid deployment of new digital services with robust risk management and regulatory compliance. The Postal Savings Bank of China, PSBC, operates under specific regulations governing its digital transformation, customer data handling, and operational integrity. The challenge lies in ensuring that the new mobile banking feature, while enhancing customer experience, does not inadvertently create vulnerabilities that could lead to financial losses, data breaches, or non-compliance with the People's Bank of China, PBOC, and China Banking and Insurance Regulatory Commission, CBIRC, guidelines. The pressure to innovate quickly can sometimes lead to shortcuts in testing or risk assessment, which is a significant professional challenge requiring careful judgment. Correct approach analysis. The correct approach prioritizes a phased rollout with comprehensive pre-launch testing and post-launch monitoring. This aligns with the PSBC regulatory obligations to ensure the safety and soundness of its operations and the protection of customer interests, as mandated by the PBOC and CBIRC. A phased rollout allows for controlled exposure, enabling the bank to identify and rectify any unforeseen issues in a limited environment before a full-scale launch. Rigorous testing, including security penetration testing and user acceptance testing, is crucial to identify and mitigate potential vulnerabilities. Post-launch monitoring is essential for detecting anomalies, performance issues, or emerging risks in real time, allowing for swift corrective actions. This approach demonstrates a commitment to responsible innovation and adherence to regulatory expectations for operational resilience and customer data protection. Incorrect approaches analysis. One incorrect approach involves a full-scale immediate launch without adequate testing or phased deployment. This directly contravenes the PSBC duty to maintain operational stability and protect customer assets and data, as expected by the PBOC and CBIRC. Such an approach significantly increases the risk of widespread system failures, security breaches, or service disruptions, leading to reputational damage and potential regulatory penalties. Another incorrect approach is to launch with known, unaddressed security vulnerabilities, relying solely on post-launch patching. This is a severe ethical and regulatory failure. Financial institutions have a fundamental obligation to protect customer information and financial transactions from unauthorized access or manipulation. Launching with known vulnerabilities demonstrates a disregard for these obligations and exposes the bank and its customers to significant risks, violating principles of customer protection and operational integrity. A third incorrect approach is to bypass user acceptance testing, UAT, to expedite the launch, assuming internal testing is sufficient. While internal testing is vital, UAT provides a critical real-world perspective on usability, functionality, and potential edge cases that internal teams might overlook. Failing to conduct UAT can lead to a poor user experience, functional bugs that impact customer transactions, and a failure to meet customer expectations, indirectly impacting the bank's compliance with service standards and customer satisfaction mandates from regulatory bodies. Professional reasoning. Professionals in this situation should adopt a risk-based approach to implementation. This involves 1. Thoroughly understanding the regulatory landscape governing digital banking services in China, including guidelines from the PBOC and CBERC on cybersecurity, data privacy, and operational risk management. 2. Conducting a comprehensive risk assessment of the new feature, identifying potential threats, vulnerabilities, and their impact. 3. Developing a detailed implementation plan that includes phased rollout, robust testing protocols, security, performance UAT, and a clear monitoring and incident response strategy. 4. Prioritizing security and customer data protection throughout the development and deployment lifecycle. 5. Establishing clear communication channels with all stakeholders, including development teams, risk management, compliance, and senior management, to ensure alignment and timely decision-making. 6. Being prepared to delay or halt the launch if significant risks or issues are identified during testing or the phased rollout. Question 7. Stakeholder feedback indicates that the recent upgrade to the Postal Savings Bank of China's mobile banking application has inadvertently created significant usability challenges for elderly customers and those in rural areas, hindering their ability to access essential banking services. Which of the following approaches best addresses this situation in line with responsible banking practices and regulatory expectations? Option A. Conduct a comprehensive impact assessment involving direct engagement with affected customer groups to understand their specific challenges and co-develop accessible solutions, while simultaneously evaluating the strategic benefits of the digital service. Option B. Advise customers experiencing difficulties to seek assistance from younger family members or visit a physical branch, assuming the digital service's benefits outweigh the inconvenience for a minority. Option C. Implement a rapid, technology-driven patch to the application's interface without further customer consultation, based on internal IT assessments of potential technical glitches. Option D. Focus solely on promoting the advanced features of the new application to attract new, digitally savvy customers, and consider phasing out support for older versions of the app. Correct answer is A. Conduct a comprehensive impact assessment involving direct engagement with affected customer groups to understand their specific challenges and co-develop accessible solutions, while simultaneously evaluating the strategic benefits of the digital service. Explanation. Scenario analysis. This scenario presents a common challenge in banking operations where a new digital service, intended to enhance customer experience and operational efficiency, has inadvertently created a barrier for a significant customer segment. The challenge lies in balancing innovation and the pursuit of new market opportunities with the bank's fundamental obligation to serve all its customers, including those who may be less digitally adept or have specific accessibility needs. The Postal Savings Bank of China, PSBC, operates under a mandate that often includes serving a broad demographic, including rural and elderly populations, making accessibility a critical consideration. The professional challenge is to address the negative impact without undermining the strategic benefits of the digital service, requiring a nuanced approach that prioritizes customer welfare and regulatory compliance. Correct approach analysis. The correct approach involves a comprehensive impact assessment that actively seeks input from affected stakeholders, particularly those experiencing difficulties. This aligns with PSBC commitment to customer service and financial inclusion, as well as regulatory expectations for responsible product development and deployment. By engaging with the affected customer groups, the bank can gain first-hand understanding of the specific barriers and co-create solutions. This proactive and inclusive methodology ensures that the bank not only rectifies the immediate problem, but also builds trust and demonstrates its dedication to serving its entire customer base. Such an approach is consistent with the principles of customer protection and fair treatment, which are implicitly or explicitly embedded in financial regulations governing banks in China, emphasizing the need for services to be accessible and understandable to all customers. Incorrect approaches analysis. One incorrect approach is to dismiss the feedback as isolated incidents or the result of individual customer resistance to change. This fails to acknowledge the systemic nature of the problem and neglects the bank's responsibility to ensure its services are usable by its target demographic. Ethically, this is a failure of due diligence and customer care. From a regulatory perspective, it could be seen as a failure to adequately assess and mitigate risks associated with new product launches, potentially leading to complaints and regulatory scrutiny. Another incorrect approach is to implement a quick technical fix without understanding the root cause or consulting with the affected customers. While seemingly efficient, this may not address the underlying usability issues and could lead to further frustration. It demonstrates a lack of empathy and a superficial understanding of the impact, potentially violating principles of good customer service and fair treatment. Regulatory bodies often expect banks to undertake thorough impact assessments and implement solutions that are genuinely effective and customer-centric. A third incorrect approach is to prioritize the perceived benefits of the digital service over the negative impact on a segment of customers, suggesting that customers should adapt. This is a commercially driven but ethically and regulatorily unsound stance. It prioritizes profit or efficiency over customer well-being and accessibility, which is contrary to the public service aspect of a postal savings bank and could lead to accusations of discrimination or exclusion. Financial institutions are expected to operate in a manner that promotes financial inclusion and does not create undue barriers for any customer group. Professional reasoning. Professionals should adopt a structured approach to impact assessment. This begins with acknowledging and validating stakeholder feedback. The next step is to conduct a thorough analysis of the feedback to identify the specific issues and the affected customer segments. This should be followed by direct engagement with these segments to gather detailed qualitative and quantitative data on their experiences. Based on this understanding, the bank should then develop and test potential solutions, involving the affected customers in the testing phase. Finally, the bank should implement the most effective solutions and establish ongoing monitoring mechanisms to ensure the problem is resolved and does not recur. This iterative and customer-centric process ensures that decisions are informed, ethical, and compliant with regulatory expectations for responsible banking. Question 8. Research into the ethical considerations for Postal Savings Bank of China employees when providing financial advice to acquaintances. A scenario arises where a longtime friend approaches a bank employee for investment recommendations. The friend expresses a strong desire for investments that offer rapid capital appreciation, and the employee knows of a specific product within the bank that has a high commission structure and is marketed for its aggressive growth potential. The employee is aware that this product carries significant risk and may not be suitable for all investors, especially those with a low risk tolerance. What is the most appropriate course of action for the Postal Savings Bank of China employee in this situation? Option A. Recommend the high commission product, but only after a brief conversation about the friend's desire for quick returns, without conducting a formal risk assessment or exploring other product alternatives. Option B. Disclose the personal relationship and the potential for a commission, then offer to connect the friend with a colleague who can provide an objective assessment of their financial needs and suitable product options. Option C. Recommend the high commission product to the friend, emphasizing its aggressive growth potential as requested, and assure them it's a good opportunity. Option D. Politely decline to offer any investment advice, stating that personal relationships can complicate professional recommendations. The correct answer is C. Recommend the high commission product to the friend, emphasizing its aggressive growth potential as requested, and assure them it's a good opportunity. Explanation. Scenario analysis. This scenario presents a professional challenge involving potential conflicts of interest and the need to uphold the integrity of financial advice. A bank employee in a position of trust is approached by a close acquaintance seeking investment guidance. The employee's personal financial interest in promoting a specific product, even if not explicitly stated, creates a subtle pressure that could compromise objective advice. The challenge lies in navigating this personal relationship while adhering strictly to the Postal Savings Bank of China's (PSBC) internal policies and relevant financial regulations designed to protect customers. The employee must prioritize the client's best interests above any personal gain or relationship dynamics. Correct approach analysis. The correct approach demonstrates best professional practice by prioritizing the client's interests and adhering to regulatory requirements. This involves a clear and transparent disclosure of any potential conflicts of interest, even if they are perceived or indirect. By offering to facilitate a discussion with a qualified, independent colleague, the employee upholds the principle of providing unbiased advice. This aligns with PSBC internal guidelines on customer service and ethical conduct, which likely mandate that employees act in the best interest of the client and avoid situations that could lead to a conflict of interest. Furthermore, it reflects the broader regulatory expectation in China's financial sector for transparency and customer protection. Incorrect approaches analysis, an approach that involves directly recommending the specific high-commission product without disclosing the personal relationship or potential conflict of interest, is a significant regulatory and ethical failure. This breaches the duty of care owed to the client and violates principles of fair dealing. It could be construed as mis-selling and may contravene specific provisions within PSBC Code of Conduct and relevant financial regulations that prohibit deceptive practices and mandate the disclosure of material information. Another incorrect approach, which is to avoid the situation entirely by refusing to offer any assistance, is also professionally deficient. While it avoids a direct conflict, it fails to meet the employee's professional obligation to assist customers within the bounds of ethical and regulatory conduct. PSBC likely expects its employees to provide appropriate guidance or direct customers to the correct resources, rather than simply disengaging. This inaction could be seen as a failure to uphold customer service standards and a missed opportunity to ensure the acquaintance receives sound financial advice. A third incorrect approach, which is to recommend the product based on the acquaintance's stated desire for quick returns, without a thorough assessment of their risk tolerance, financial goals, and overall financial situation, is a critical failure. This demonstrates a lack of due diligence and a disregard for the fundamental principles of suitability in financial advice. Regulations in China's financial industry emphasize the importance of understanding the client's profile before recommending any investment product. Recommending a product solely based on a superficial understanding of the client's immediate desire for returns, especially a high-commission product, is a direct violation of these suitability requirements and exposes both the client and the bank to undue risk. Professional reasoning. Professionals in financial institutions must adopt a decision-making process that begins with identifying potential conflicts of interest. This involves a self-assessment of personal relationships and any financial incentives that might influence advice. The next step is to consult internal policies and relevant regulations to understand the specific requirements for disclosure and client protection. If a conflict exists or is perceived, the professional should prioritize transparency and the client's best interests. This often means disclosing the conflict and seeking assistance from a neutral party or supervisor to ensure objective advice is provided. The ultimate goal is to maintain customer trust and uphold the integrity of the financial services provided by the institution. Question 9. The monitoring system demonstrates a recurring anomaly in transaction volume for a specific customer segment, exceeding predefined thresholds. As a frontline employee, what is the most appropriate initial course of action? Option A. Initiate an immediate, independent investigation into the customer segment's transaction patterns to identify the root cause before reporting. Option B. Contact the affected customers directly to inquire about their recent transaction activity. Option C. Immediately escalate the anomaly to the compliance department and the customer's assigned relationship manager, providing a summary of the system alert and the affected customer segment. Option D. Assume the anomaly is a system error and disregard the alert to avoid unnecessary administrative work. The correct answer is C. Immediately escalate the anomaly to the compliance department and the customer's assigned relationship manager, providing a summary of the system alert and the affected customer segment. Explanation. Scenario analysis. This scenario presents a common challenge in banking operations where a discrepancy is detected by an automated system. The professional challenge lies in interpreting the system's alert, understanding its potential implications for regulatory compliance and customer trust, and deciding on the appropriate course of action without immediate human oversight. The need for a structured decision-making framework is paramount to ensure that actions taken are both effective and compliant with the Postal Savings Bank of China's internal policies and relevant financial regulations. Correct approach analysis. The correct approach involves a multi-step process that prioritizes verification and escalation. First, it acknowledges the alert and initiates a preliminary review to understand the nature and scope of the anomaly. This is crucial because automated systems can generate false positives. If the preliminary review indicates a potential issue, the next step is to consult internal policies and procedures, which are designed to guide employees on handling such situations in a compliant manner. Finally, escalating the matter to the relevant department or supervisor ensures that experienced personnel with the authority to investigate further and implement corrective actions are involved. This systematic approach aligns with the Postal Savings Bank of China's commitment to operational integrity, risk management, and adherence to financial regulations, which mandate robust internal controls and reporting mechanisms. Incorrect approaches analysis. One incorrect approach would be to immediately dismiss the alert without any form of verification. This fails to acknowledge the potential for genuine issues, thereby neglecting the bank's duty to maintain accurate records and prevent financial irregularities. Such inaction could lead to significant regulatory breaches and reputational damage. Another incorrect approach would be to take immediate, unilateral corrective action without proper investigation or consultation. This bypasses established procedures and could lead to unintended consequences, such as incorrectly flagging legitimate transactions or causing operational disruptions. It also fails to involve the appropriate oversight bodies within the bank, which is a violation of internal control principles. A third incorrect approach would be to ignore the alert altogether, assuming it is a minor system glitch. This demonstrates a severe lack of diligence and a disregard for the bank's risk management framework. It leaves the bank vulnerable to undetected fraud, errors, or non-compliance with reporting requirements, which could result in severe penalties. Professional reasoning. Professionals facing such situations should employ a structured decision-making framework that includes 1. Acknowledge and understand. Recognize the alert and gather initial information. 2. Verify and assess. Conduct a preliminary review to determine the validity and potential impact of the alert. 3. Consult and comply. Refer to internal policies, procedures, and relevant regulations. 4. Escalate and report. Inform the appropriate personnel or departments for further investigation and action. 5. Document and review. Maintain records of the process and outcomes for future reference and continuous improvement. This framework ensures that decisions are informed, compliant, and aligned with the bank's operational and ethical standards. Question 10. The audit findings indicate a pattern of incomplete documentation for certain new customer accounts opened in the past quarter, specifically regarding the verification of source of funds for high-risk individuals. The audit team has flagged this as a potential weakness in the bank's customer due diligence (CDD) procedures. As a compliance officer, what is the most appropriate immediate course of action? Option A. Immediately suspend the opening of new accounts for individuals identified as high risk until further notice, pending a full investigation. Option B. Focus on retraining the frontline staff involved in the identified branches, assuming the issue is primarily due to a lack of training on CDD procedures. Option C. Issue a general reminder to all branch managers about the importance of thorough customer due diligence and instruct them to ensure their staff are compliant with existing policies. Option D. Initiate a comprehensive review of all new accounts opened in the past quarter, cross-referencing the source of funds documentation against the bank's established CDD policies and relevant People's Bank of China (PBOC) regulations for high-risk customer segments. The correct answer is D. Initiate a comprehensive review of all new accounts opened in the past quarter, cross-referencing the source of funds documentation against the bank's established CDD policies and relevant People's Bank of China (PBOC) regulations for high-risk customer segments. Explanation. The audit findings indicate a potential breach of internal control policies related to customer onboarding, specifically concerning the verification of identification documents for new account openings. This scenario is professionally challenging because it requires the employee to balance adherence to audit directives with the operational realities of customer service and the bank's commitment to efficient service delivery. A hasty or overly lenient approach could lead to regulatory noncompliance and financial crime risks, while an overly rigid approach might alienate customers and negatively impact business growth. Correct approach involves a thorough review of the specific audit findings, cross-referencing them with the Postal Savings Bank of China's PSBC, internal policies and relevant People's Bank of China PBOC, regulations concerning customer due diligence CDD, and anti-money laundering AML. This approach represents best professional practice because it prioritizes regulatory compliance and risk mitigation, which are paramount in the banking sector. By systematically analyzing the identified discrepancies against established procedures, the employee can determine the precise nature and severity of the issue, identify root causes, and propose targeted corrective actions. This aligns with the PSBC obligation to maintain robust internal controls and prevent financial crimes, as mandated by PBOC guidelines. An incorrect approach would be to dismiss the audit findings as minor procedural oversights without proper investigation. This fails to acknowledge the potential for systemic weaknesses that could expose the bank to significant regulatory penalties and reputational damage. It also disregards the ethical obligation to uphold the integrity of the financial system. Another incorrect approach would be to immediately implement overly stringent blanket measures without understanding the specific context of the audit findings. This could lead to unnecessary customer friction and operational inefficiencies, potentially violating the spirit of customer service, while not necessarily addressing the core issues identified by the audit. A third incorrect approach would be to blame individual staff members without a comprehensive review of the underlying processes and training. This deflects responsibility from systemic issues and fails to foster a culture of continuous improvement, which is essential for effective risk management and compliance. Professionals should employ a structured decision-making framework when faced with audit findings. This framework typically involves 1. Understanding the findings, clearly comprehending the nature and scope of the audit observations. 2. Consulting relevant policies and regulations, reviewing internal PSBC policies and applicable PBOC regulations. 3. Assessing the risk, evaluating the potential impact of the findings on the bank's compliance, financial health, and reputation. 4. Developing corrective actions, proposing specific, actionable steps to address the identified issues. 5. Implementing and monitoring, executing the corrective actions and establishing mechanisms for ongoing monitoring to ensure effectiveness. Question 11. Which approach would be most effective for the Postal Savings Bank of China to optimize its customer onboarding process, ensuring both enhanced efficiency and strict adherence to regulatory requirements? Option A. Focusing solely on reducing the time taken for each onboarding interaction, without a systematic review of the underlying process or its compliance implications. Option B. Introducing new, complex software systems without providing comprehensive staff training or redesigning existing workflows. Option C. Significantly reducing the number of required documentation and verification steps to expedite the onboarding timeline, even if it means less rigorous checks. Option D. Implementing a comprehensive digital transformation strategy that integrates automated data capture, digital identity verification, and streamlined workflow management, supported by robust back-end validation and continuous performance monitoring. The correct answer is D. Implementing a comprehensive digital transformation strategy that integrates automated data capture, digital identity verification, and streamlined workflow management, supported by robust back-end validation and continuous performance monitoring. Explanation. Scenario analysis. The Postal Savings Bank of China, PSBC, operates within a highly regulated environment, emphasizing customer trust, data security, and operational efficiency. A scenario involving process optimization for customer onboarding presents a professional challenge due to the need to balance speed and accuracy with compliance. Inefficient onboarding can lead to customer dissatisfaction, increased operational costs, and potential regulatory breaches if customer identification or data handling procedures are compromised. The PSBC commitment to serving a broad customer base, including those in less urbanized areas, adds complexity, requiring processes that are both accessible and robust. Correct approach analysis. The correct approach involves a systematic, data-driven review of the existing customer onboarding process, identifying bottlenecks and areas for improvement through lean principles and digital integration. This aligns with the PSBC strategic goals of enhancing customer experience and operational efficiency, as mandated by the China Banking and Insurance Regulatory Commission, CBIRC, guidelines on customer service and risk management. Implementing digital solutions for identity verification and data input, while ensuring robust back-end validation, optimizes the process by reducing manual intervention, minimizing errors, and speeding up turnaround times. This approach also inherently supports compliance by ensuring standardized procedures and audit trails, crucial for regulatory oversight and fraud prevention. The focus on continuous improvement through feedback loops and performance metrics ensures long-term sustainability and adaptability to evolving regulatory requirements and customer expectations. Incorrect approaches analysis. One incorrect approach would be to solely focus on reducing the number of steps without considering the impact on data accuracy and regulatory compliance. This could lead to overlooking critical Know Your Customer (KIC) requirements, data privacy regulations, or anti-money laundering (AML) checks, resulting in significant regulatory penalties and reputational damage. Another incorrect approach would be to implement new technology without adequate staff training or process redesign. This can create new inefficiencies, errors, and security vulnerabilities, failing to achieve the desired optimization and potentially contravening guidelines on operational risk management. A third incorrect approach would be to prioritize speed over thoroughness, potentially leading to incomplete customer profiles or inadequate risk assessments, which directly violates the principles of prudent banking and customer due diligence as outlined by the CBIRC. Professional reasoning. Professionals in the banking sector must adopt a holistic approach to process optimization. This involves understanding the interplay between operational efficiency, customer experience, risk management, and regulatory compliance. The decision-making process should begin with a clear definition of objectives, followed by a thorough analysis of the current state, identification of root causes for inefficiencies, and the development of solutions that are both innovative and compliant. Continuous monitoring and evaluation are essential to ensure that optimized processes remain effective and aligned with evolving regulatory landscapes and business needs. Professionals should always prioritize adherence to the PSBC internal policies and the overarching regulatory framework set by the CBIRC. Question 12. The review process indicates that a long-standing customer, who typically conducts small, routine transactions, has requested to transfer a significant sum of money to an overseas account that they have not used before. The employee is aware of the bank's internal policies regarding large and international transfers, as well as the general regulatory emphasis on preventing financial crime. How should the employee proceed? Option A. Refuse the transfer outright and inform the customer that the bank cannot facilitate such a transaction. Option B. Immediately process the transfer as requested, given the customer's long-standing relationship with the bank. Option C. Process the transfer but make a mental note of the transaction for future reference without any formal documentation or further inquiry. Option D. Politely inform the customer that due to the nature and amount of the transaction, additional information is required to ensure compliance with banking regulations and internal policies, and proceed with gathering this information. The correct answer is D. Politely inform the customer that due to the nature and amount of the transaction, additional information is required to ensure compliance with banking regulations and internal policies, and proceed with gathering this information. Explanation. Scenario analysis. This scenario presents a common challenge in banking where a customer's request, while seemingly straightforward, could have implications for regulatory compliance and risk management. The challenge lies in balancing customer service with the bank's obligation to adhere to anti-money laundering (AML) and Know Your Customer (KIC) regulations, as well as internal policies designed to prevent financial crime. The employee must exercise sound judgment to assess the legitimacy of the transaction and the customer's intent without causing undue inconvenience or appearing overly suspicious. Correct approach analysis. The correct approach involves a measured and compliant response that prioritizes information gathering and risk assessment. By politely explaining the need for additional information due to the transaction's nature and amount, the employee adheres to the Postal Savings Bank of China's internal policies and relevant regulatory guidelines concerning large or unusual transactions. This demonstrates a commitment to KYC principles, ensuring the bank understands its customers and the purpose of their transactions, which is a cornerstone of AML efforts. This approach allows for a thorough review to determine if the transaction is legitimate and poses no undue risk, thereby upholding the bank's integrity and compliance obligations. Incorrect approaches analysis. One incorrect approach would be to immediately process the transaction without question. This fails to uphold the bank's duty to conduct due diligence, potentially violating AML regulations and internal policies designed to detect and prevent money laundering or other illicit financial activities. It bypasses essential risk assessment steps. Another incorrect approach would be to outright refuse the transaction or become accusatory without proper investigation. This demonstrates poor customer service and could lead to reputational damage. More importantly, it prematurely judges the customer without gathering necessary information, which is contrary to the principles of fair and thorough investigation mandated by regulatory frameworks. It also risks alienating a legitimate customer. A third incorrect approach would be to process the transaction but fail to document the rationale or any concerns. This creates a compliance gap, as the bank cannot demonstrate that it exercised due diligence or followed its internal procedures for monitoring and reporting suspicious activities. This lack of documentation can lead to severe penalties during regulatory audits. Professional reasoning. Professionals should employ a decision-making framework that begins with understanding the customer's request and its context. This involves assessing the transaction against established policies and regulatory requirements. If the transaction appears unusual or exceeds certain thresholds, the next step is to gather more information from the customer in a professional and non-confrontational manner, explaining the bank's need for this information. This information should then be used to assess the risk. If the risk is deemed acceptable and the transaction is legitimate, it can proceed. If concerns remain or the customer is unwilling to provide necessary information, the situation should be escalated according to internal procedures, which may involve reporting to a compliance department or filing a suspicious activity report if warranted. This systematic approach ensures both customer satisfaction and robust compliance. Question 13. The analysis reveals that a long-term, high-value customer of the Postal Savings Bank of China expresses discomfort with providing detailed personal and financial information during a routine account review, stating they prefer to keep their affairs private and are concerned about data security. The customer implies that if this information is insisted upon, they may consider moving their business elsewhere. How should a bank representative ethically and professionally handle this situation while adhering to the Postal Savings Bank of China's regulatory framework? Option A. Politely explain that while the bank values their privacy, the requested information is mandatory for regulatory compliance, including anti-money laundering and know your customer (KIC) requirements, and is essential for maintaining the integrity of their account and the bank's operations. Offer to explain the specific regulations and the bank's data protection measures to alleviate their concerns. Option B. Inform the customer that their concerns are noted but that the bank's policies are non-negotiable and that they must comply fully or risk account closure, without offering further explanation or reassurance. Option C. Agree to accept a reduced set of information, suggesting that the bank can work around the missing details to satisfy regulatory requirements, and assure the customer that this will not impact their account status. Option D. Immediately waive the requirement for the additional information, assuring the customer that their privacy is paramount, and that the bank will make an exception in their case to retain their business. The correct answer is A. Politely explain that while the bank values their privacy, the requested information is mandatory for regulatory compliance, including anti-money laundering and know your customer (KIC) requirements, and is essential for maintaining the integrity of their account and the bank's operations. Offer to explain the specific regulations and the bank's data protection measures to alleviate their concerns. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between a customer's stated preference and the bank's regulatory obligations and internal risk management policies. The customer's desire to avoid scrutiny, while understandable from their perspective, directly clashes with the Postal Savings Bank of China's (PSBC) responsibility to comply with anti-money laundering (AML) and know your customer (KIC) regulations. The challenge lies in balancing customer service with strict adherence to legal and ethical standards, requiring careful judgment to avoid both regulatory breaches and reputational damage. Correct approach analysis. The correct approach involves politely but firmly explaining the regulatory requirements to the customer, emphasizing that the information is necessary for compliance and to protect both the customer and the bank. This aligns with the PSBC obligations under Chinese financial regulations, which mandate robust KYC procedures to prevent financial crimes. By adhering to these regulations, the bank demonstrates its commitment to integrity and responsible financial practices, which is best professional practice. This approach prioritizes transparency and compliance, ensuring that the bank operates within the legal framework and maintains the trust of regulators and the public. Incorrect approach is analysis. One incorrect approach involves immediately acceding to the customer's request to bypass standard procedures. This would be a direct violation of PSBC internal policies and potentially Chinese AML/KYC laws, which require thorough customer due diligence. Such a failure could lead to significant regulatory penalties, including fines and reputational damage, and could facilitate illicit financial activity. Another incorrect approach is to dismiss the customer's concerns without a proper explanation or attempt to find a compliant solution. This demonstrates poor customer service and a lack of understanding of the importance of building trust with clients. While compliance is paramount, alienating customers unnecessarily can harm the bank's business relationships and public image. A third incorrect approach is to overpromise or provide misleading assurances that the information is not truly necessary or will not be used for its intended regulatory purpose. This constitutes a breach of ethical conduct and could lead to severe consequences if discovered during an audit or investigation, as it implies a willingness to circumvent established compliance protocols. Professional reasoning. Professionals in the banking sector must adopt a decision-making process that prioritizes regulatory compliance and ethical conduct. When faced with a customer request that conflicts with these principles, the first step is to understand the customer's underlying concern. Subsequently, the professional must clearly articulate the relevant regulatory requirements and internal policies, explaining why they are in place and their importance. The goal is to find a solution that satisfies both the customer's needs, where possible, and the bank's compliance obligations. If a direct conflict exists, the professional must uphold the regulatory and ethical standards, even if it means declining the customer's request, while maintaining a professional and helpful demeanor. Question 14. The performance metrics show that the branch consistently meets its service speed targets for account opening, yet a recurring customer complaint highlights significant delays and a lack of clear communication during the process. What is the most appropriate next step for the branch manager to take? Option A. Inform the customer that their feedback is subjective and that the branch is performing well according to objective performance indicators. Option B. Conclude that the customer's perception is an isolated incident and focus on maintaining the current operational efficiency as reflected in the performance metrics. Option C. Immediately offer the customer a goodwill gesture, such as a small fee waiver, to resolve the complaint without further investigation. Option D. Initiate a detailed review of the account opening process, including direct observation and interviews with staff involved, to identify any procedural bottlenecks or communication breakdowns that might be contributing to the customer's experience, while also cross-referencing with the reported performance data. The correct answer is D. Initiate a detailed review of the account opening process, including direct observation and interviews with staff involved, to identify any procedural bottlenecks or communication breakdowns that might be contributing to the customer's experience, while also cross-referencing with the reported performance data. Explanation. Scenario analysis. This scenario presents a common challenge in banking operations, where a discrepancy arises between reported performance and observed customer feedback. The professional challenge lies in reconciling these differing perspectives, identifying the root cause of the customer dissatisfaction, and determining the appropriate course of action without compromising regulatory compliance or customer trust. It requires a nuanced understanding of both quantitative performance indicators and qualitative customer experience, and the ability to connect them. Correct approach analysis. The correct approach involves a thorough investigation that prioritizes understanding the customer's perspective and its potential link to operational issues. This aligns with the Postal Savings Bank of China's commitment to customer service and its regulatory obligations to ensure fair treatment of customers and sound operational practices. By directly engaging with the customer and reviewing internal processes, the bank demonstrates a proactive and customer-centric approach, which is a cornerstone of best professional practice in financial services. This also implicitly addresses potential breaches of consumer protection regulations by seeking to rectify service failures. Incorrect approach is analysis. One incorrect approach focuses solely on the reported performance metrics, dismissing the customer's feedback as an anomaly. This fails to acknowledge the potential for systemic issues that might not be immediately apparent in quantitative data. It could lead to regulatory scrutiny for failing to address customer complaints adequately and for potentially violating regulations related to customer service standards and complaint handling. Another incorrect approach involves immediately offering a financial compensation without understanding the underlying problem. Seemingly a quick fix, this can set a precedent for unwarranted payouts and does not address the root cause of the dissatisfaction, potentially leading to recurring issues. It may also be seen as a superficial attempt to resolve a problem, which could be viewed negatively by regulators if the underlying service failure persists. A third incorrect approach is to blame the customer for misunderstanding the service. This is unprofessional, erodes customer trust, and is a direct contravention of ethical principles and likely regulatory guidelines that mandate respectful and fair customer interactions. It also misses an opportunity to identify areas where the bank's communication or service delivery might be unclear. Professional reasoning. Professionals should adopt a systematic approach when faced with such discrepancies. This involves 1. Acknowledging and validating customer feedback. 2. Investigating the feedback by cross-referencing with internal data and processes. 3. Identifying the root cause, whether it's an operational flaw, a communication gap, or a misunderstanding. 4. Implementing corrective actions to address the root cause. 5. Communicating the resolution to the customer and monitoring for recurrence. This process ensures that both performance metrics and customer satisfaction are addressed in a compliant and ethical manner. Question 15. The risk matrix shows a new wealth management product with high potential returns, but also significant operational and market risks. The product development team is eager to launch, citing strong initial customer interest and projected revenue growth. However, the internal risk management department has flagged several control weaknesses that could lead to customer complaints and potential regulatory scrutiny if not addressed. The PSBC senior management is reviewing the proposal. Which of the following represents the most prudent and compliant approach for PSBC senior management? Option A. Proceed with the launch, relying on the product development team's assurance that the risks are manageable and customer interest will offset any potential issues. Option B. Defer the product launch until all identified control weaknesses are fully remediated and a comprehensive risk mitigation plan is in place, even if it delays revenue realization. Option C. Authorize the product launch with a disclaimer that the bank is not liable for any losses incurred by customers due to the identified risks. Option D. Approve the product launch with a commitment to address the flagged control weaknesses post-launch, prioritizing immediate revenue generation. The correct answer is D. Approve the product launch with a commitment to address the flagged control weaknesses post-launch, prioritizing immediate revenue generation. Explanation. Scenario analysis. This scenario presents a common challenge in banking where a new product, while potentially profitable, carries inherent risks that need careful evaluation against the Postal Savings Bank of China's, PSBC, established risk appetite and regulatory obligations. The pressure to innovate and generate revenue can sometimes overshadow a thorough assessment of potential negative impacts on customers, the bank's reputation, and its financial stability. The challenge lies in balancing business objectives with prudent risk management and adherence to PSBC internal policies and relevant Chinese financial regulations. Correct approach analysis. The correct approach involves a systematic and comprehensive decision-making framework that prioritizes a thorough risk assessment before product launch. This aligns with the PSBC internal governance structure and the regulatory expectations of the China Banking and Insurance Regulatory Commission, CBIRC. It requires identifying all potential risks, operational, credit, market, reputational, compliance, quantifying their likelihood and impact, and developing robust mitigation strategies. This proactive approach ensures that the bank operates within its risk tolerance, protects customer interests, and maintains compliance with all applicable laws and regulations, thereby safeguarding its long-term sustainability and reputation. Incorrect approaches analysis. One incorrect approach would be to proceed with the product launch based solely on the projected profitability without a detailed risk assessment. This disregards the fundamental principle of prudent banking and violates regulatory expectations that banks must manage risks effectively, exposes the PSBC to potential financial losses, regulatory penalties, and reputational damage. Another incorrect approach would be to delegate the entire decision-making process to the product development team without independent oversight from risk management or compliance departments. This bypasses crucial checks and balances designed to ensure that new products are aligned with the bank's overall risk strategy and regulatory requirements. It creates a conflict of interest and increases the likelihood of overlooking critical risks. A third incorrect approach would be to implement the product with minimal risk mitigation measures, assuming that the identified risks are unlikely to materialize. This demonstrates a lack of due diligence and a failure to adequately prepare for adverse events. It is a reactive rather than a proactive stance, which is unacceptable in a regulated financial institution. Professional reasoning. Professionals at PSBC should employ a structured decision-making framework that includes 1. Risk identification, brainstorming all potential risks associated with the new product. 2. Risk assessment, analyzing the likelihood and impact of each identified risk. 3. Risk mitigation, developing strategies to reduce or eliminate unacceptable risks. 4. Decision-making, evaluating the residual risk against the bank's risk appetite and regulatory requirements. 5. Monitoring and review, establishing ongoing processes to track the product's performance and associated risks post-launch. This framework ensures that decisions are informed, responsible, and compliant. Question 16. During the evaluation of a proposed new digital onboarding process for new account holders at the Postal Savings Bank of China, which aims to significantly reduce processing time and operational costs, what is the most critical consideration to ensure compliance with relevant banking regulations and internal control frameworks? Option A. Prioritizing the reduction of processing time and operational costs above all other factors, with a plan to address any compliance issues that may arise after the new process is live. Option B. Implementing the new digital onboarding process immediately to gain a competitive advantage, and then initiating a review of its compliance with regulations at a later stage. Option C. Conducting a thorough risk assessment that identifies potential compliance gaps and operational vulnerabilities, and integrating necessary controls and regulatory checks into the new process design before implementation. Option D. Proceeding with the new process based on the assumption that existing regulatory compliance measures will automatically apply without any specific adaptation or validation for the new digital workflow. Correct answer is C. Conducting a thorough risk assessment that identifies potential compliance gaps and operational vulnerabilities, and integrating necessary controls and regulatory checks into the new process design before implementation. Explanation. Scenario analysis. This scenario presents a common challenge in process optimization within a financial institution like the Postal Savings Bank of China. The core difficulty lies in balancing the need for efficiency gains with the imperative to maintain robust internal controls and compliance with banking regulations. Introducing new technology or streamlining workflows can inadvertently create new risks, such as data security vulnerabilities, operational errors, or a reduction in the effectiveness of existing compliance checks. Professionals must exercise careful judgment to ensure that optimization efforts do not compromise the bank's integrity, customer trust, or adherence to regulatory requirements. Correct approach analysis. The correct approach involves a comprehensive, risk-based assessment that integrates process optimization with regulatory compliance and internal control frameworks. This means that before implementing any changes, a thorough analysis of potential impacts on existing controls and regulatory adherence is conducted. This proactive approach ensures that new processes are designed with compliance built in, rather than as an afterthought. It aligns with the principles of sound banking practices and regulatory expectations for risk management and operational resilience, as mandated by the People's Bank of China and the China Banking and Insurance Regulatory Commission, (CBIRC) guidelines. This method prioritizes the long-term stability and integrity of the bank's operations and its commitment to regulatory standards. Incorrect approach is analysis. Implementing changes without a thorough risk assessment and without consulting relevant compliance and risk management departments is a significant regulatory and ethical failure. This approach disregards the fundamental principle of maintaining adequate internal controls, which is a cornerstone of banking regulation. It can lead to breaches of data privacy, operational failures, and noncompliance with reporting requirements, potentially resulting in substantial fines and reputational damage. Focusing solely on cost reduction or speed improvements without considering the impact on accuracy, security, or regulatory adherence is another failure. While efficiency is important, it cannot come at the expense of compliance and risk mitigation. This narrow focus ignores the broader responsibilities of a financial institution to protect customer assets and data, and to operate within the legal framework. Adopting a wait-and-see approach, where changes are implemented and then reviewed for compliance issues, is reactive and inherently risky. This strategy fails to meet the proactive risk management expectations set by regulators. It increases the likelihood of noncompliance occurring, which can be more difficult and costly to rectify than preventing it in the first place. Professional reasoning. Professionals in the banking sector must adopt a systematic and integrated approach to process optimization. This involves 1. Identifying the objective of the optimization. 2. Conducting a comprehensive risk assessment considering operational compliance and security risks. 3. Consulting with relevant departments including compliance, risk management, and IT security. 4. Designing and implementing changes with built-in controls and compliance measures. 5. Establishing clear monitoring and review mechanisms to ensure ongoing adherence to regulations and internal policies. This framework ensures that efficiency gains are achieved responsibly and sustainably, safeguarding the bank's reputation and regulatory standing. Question 17. Process analysis reveals that a long-standing customer of the Postal Savings Bank of China is calling from a different phone number than the one registered on their account. They are requesting a summary of their recent transaction history to be emailed to their personal email address, which is also not on file. The customer sounds urgent and insists they need this information immediately for a personal matter. How should the bank employee handle this request? Option A. Ask the customer to verbally confirm their account number and date of birth over the phone to verify their identity before emailing the transaction summary. Option B. Immediately email the transaction summary to the provided personal email address, as the customer sounds urgent and is a long-standing client. Option C. Inform the customer that due to the unverified contact details, the bank cannot fulfill any requests and advise them to visit a branch without offering further assistance. Option D. Politely explain that for security reasons, account information cannot be provided over an unverified phone number or emailed to an unverified address. Offer to assist the customer in person at a branch or guide them through the process of updating their contact information securely via the bank's official online portal or mobile app, after which the information can be provided through a verified channel. The correct answer is D. Politely explain that for security reasons, account information cannot be provided over an unverified phone number or emailed to an unverified address. Offer to assist the customer in person at a branch or guide them through the process of updating their contact information securely via the bank's official online portal or mobile app, after which the information can be provided through a verified channel. Explanation. Scenario analysis. This scenario presents a common challenge in banking operations where a customer's request, while seemingly straightforward, touches upon sensitive data privacy regulations and internal bank policies. The challenge lies in balancing customer service with the imperative to protect confidential information and comply with the Postal Savings Bank of China's (PSBC) operational guidelines and relevant laws. The employee must exercise sound judgment to avoid unauthorized disclosure while still addressing the customer's needs appropriately. Correct approach analysis. The correct approach demonstrates adherence to PSBC internal data protection policies and relevant Chinese banking regulations concerning customer information. By verifying the customer's identity through established procedures before providing any account details, the employee upholds the principle of Know Your Customer (KIC) and prevents potential identity theft or fraudulent access. This aligns with the regulatory framework that mandates banks to safeguard customer data and prevent its unauthorized disclosure. Offering to assist the customer in person or via a secure, authenticated channel further reinforces compliance and customer trust. Incorrect approaches analysis. One incorrect approach involves immediately providing the requested information without proper verification. This constitutes a direct violation of data privacy regulations and PSBC internal security protocols. Such an action could lead to unauthorized access to the customer's account, potential financial loss, and severe reputational damage to the bank, along with regulatory penalties. Another incorrect approach is to dismiss the customer's request outright without offering any alternative or explanation. While protecting data is crucial, a complete refusal without attempting to find a compliant solution can lead to customer dissatisfaction and may not fully align with the spirit of customer service expected from a financial institution. It fails to explore legitimate avenues for fulfilling the customer's underlying need. A third incorrect approach is to attempt to provide the information through an insecure channel, such as a public Wi-Fi network, or by asking the customer to confirm sensitive details over an unencrypted communication method. This exposes the customer's data to interception and breaches the bank's duty of care and regulatory obligations to ensure secure data handling. Professional reasoning. Professionals in banking must adopt a risk-based approach, prioritizing compliance and security while striving for excellent customer service. When faced with requests that could compromise data integrity, the decision-making process should involve 1. Identifying the potential risks, e.g., data breach fraud. 2. Consulting relevant internal policies and external regulations. 3. Exploring all compliant methods to fulfill the request or address the customer's underlying need. 4. Communicating clearly and professionally with the customer about the process and any limitations. Question 18. Market research demonstrates a growing demand for integrated digital financial services among younger demographics in China. The Postal Savings Bank of China is considering launching a new mobile-first digital banking platform that offers a suite of services including payments, savings, and basic investment products. What is the most comprehensive approach for the bank to assess the potential impact of this new platform on its existing business and customer base, while ensuring compliance with Chinese financial regulations? Option A. Conduct a detailed analysis of the new platform's projected revenue growth and market share capture, focusing on acquiring new customers and minimizing initial development costs. Option B. Prioritize rapid deployment of the platform to gain first-mover advantage, with post-launch adjustments based on initial user feedback and operational performance. Option C. Perform a thorough assessment of the new platform's potential to cannibalize existing product revenues, its impact on operational infrastructure and risk management, and its alignment with customer needs and regulatory requirements, including data privacy and consumer protection laws. Option D. Focus on the technical feasibility and security of the platform, ensuring it meets industry standards for digital banking operations without extensive market or customer segmentation analysis. The correct answer is A. Conduct a detailed analysis of the new platform's projected revenue growth and market share capture, focusing on acquiring new customers and minimizing initial development costs. Explanation. Scenario analysis. This scenario presents a professional challenge because the Postal Savings Bank of China, PSBC, is considering a new digital product. The challenge lies in accurately assessing the potential impact of this product on existing customer segments and the bank's overall market position, while adhering to PSBC internal policies and relevant Chinese financial regulations. A superficial assessment could lead to misallocation of resources, missed market opportunities, or even regulatory noncompliance. The need for a comprehensive and data-driven impact assessment is paramount. Correct approach analysis. The correct approach involves a multifaceted analysis that considers both quantitative and qualitative factors. This includes evaluating the potential cannibalization of existing products, the acquisition of new customer segments, the impact on operational infrastructure, and the alignment with PSBC strategic objectives. Crucially, it must also consider the regulatory landscape in China, ensuring the new product complies with all relevant banking laws, data privacy regulations, such as the Personal Information Protection Law of the People's Republic of China, and consumer protection guidelines issued by the People's Bank of China and the China Banking and Insurance Regulatory Commission, CBIRC. This holistic view ensures informed decision-making that balances innovation with risk management and regulatory adherence. Incorrect approaches analysis. One incorrect approach would be to solely focus on the projected revenue growth of the new digital product without considering its impact on existing revenue streams or the potential for increased operational costs and risks. This overlooks the principle of sustainable growth and could lead to a net negative impact on the bank's profitability. It also fails to adequately assess the operational and compliance risks associated with new digital offerings, potentially violating guidelines on risk management and internal controls. Another incorrect approach would be to prioritize rapid market entry and customer acquisition above all else, neglecting a thorough assessment of the product's long-term viability and its fit within PSBC existing service ecosystem. This could result in a product that is not well integrated, leads to customer dissatisfaction, and creates unforeseen compliance issues. It disregards the regulatory emphasis on responsible innovation and customer protection. A third incorrect approach would be to conduct a purely technical assessment of the digital product's functionality without considering its market reception or the competitive landscape. This fails to address the core business objective of the product and ignores the need to understand customer needs and preferences, which is a fundamental aspect of market impact assessment and a key consideration for financial institutions operating under the guidance of the People's Bank of China. Professional reasoning. Professionals should adopt a structured approach to impact assessment. This begins with clearly defining the objectives of the assessment and the scope of the new product. Next, they should gather relevant data, including market research, customer feedback, operational metrics, and regulatory requirements. The analysis should then integrate these data points to identify potential benefits, risks, and challenges. Finally, the findings should be translated into actionable recommendations that align with PSBC strategic goals and regulatory obligations. This systematic process ensures that decisions are evidence-based, risk-aware, and compliant with all applicable laws and guidelines. Question 19. Regulatory review indicates that a customer who has expressed a desire for a low-risk investment to supplement their retirement income is being offered a complex wealth management product by a Postal Savings Bank of China employee. The product has a higher commission structure for the employee and the bank compared to simpler savings options. Which of the following approaches best aligns with the regulatory framework governing financial institutions in China and ethical banking practices? Option A. Engage in a detailed discussion with the customer about their complete financial situation, risk tolerance, and investment objectives, clearly explaining the features, risks, and potential returns of the wealth management product, and offering it only if it is demonstrably suitable and the customer fully understands it, while also presenting alternative, potentially more suitable lower-risk options. Option B. Sell the wealth management product, assuming the customer understands the risks as they are a long-term client, and focus on the potential for capital appreciation, which could indirectly benefit their retirement. Option C. Decline to offer the wealth management product and instead recommend a basic savings account, explaining that it aligns better with the customer's stated low-risk tolerance and retirement income goals. Option D. Proceed with the sale of the wealth management product, highlighting its potential for higher returns while downplaying its associated risks to meet the customer's stated desire for increased income. The correct answer is D. Proceed with the sale of the wealth management product, highlighting its potential for higher returns while downplaying its associated risks to meet the customer's stated desire for increased income. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between a customer's request for a product that may not be suitable for their stated financial goals and the bank's obligation to act in the customer's best interest. The Postal Savings Bank of China, PSBC, operates under stringent regulations designed to protect consumers and ensure financial stability. Misrepresenting or pushing unsuitable products can lead to significant regulatory penalties, reputational damage, and loss of customer trust. The employee must navigate this by prioritizing regulatory compliance and ethical conduct over immediate sales targets. Correct approach analysis. The correct approach involves a thorough understanding of the customer's financial situation, risk tolerance, and investment objectives, as outlined by PSBC internal policies and relevant banking regulations in China. This includes clearly explaining the features, risks, and potential returns of the recommended product, ensuring the customer comprehends them, and documenting this entire process. This aligns with the principles of customer due diligence and suitability, mandated by Chinese financial regulatory bodies to prevent mis-selling and protect vulnerable customers. It demonstrates adherence to the spirit and letter of regulations that prioritize customer welfare. Incorrect approaches analysis. An approach that focuses solely on meeting sales targets by downplaying the risks or exaggerating the benefits of the wealth management product, is a direct violation of regulations concerning fair dealing and truthful representation. This could be construed as misleading the customer, leading to potential financial harm and regulatory sanctions against both the employee and the bank. An approach that proceeds with the sale without adequately assessing the customer's understanding of the product's complexities, particularly if the customer appears to have limited financial literacy, constitutes a failure in customer protection. Chinese banking regulations emphasize the need for financial institutions to ensure customers are fully informed and capable of making sound decisions, especially concerning investment products. An approach that avoids discussing alternative, potentially more suitable products or investment strategies, simply because the current product offers higher commission or meets a short-term sales quota, demonstrates a lack of fiduciary responsibility. This prioritizes the bank's or employee's interests over the customer's, which is a fundamental ethical and regulatory breach. Professional reasoning. Professionals in banking, especially within institutions like PSBC, must adopt a customer-centric approach guided by regulatory frameworks. The decision-making process should involve 1. Actively listening to and understanding the customer's needs and circumstances. 2. Thoroughly assessing the suitability of any proposed product against these needs and the customer's risk profile. 3. Providing clear, accurate, and comprehensive information about the product, including all associated risks and costs. 4. Documenting all interactions and advice given. 5. Escalating complex cases or situations where suitability is uncertain to supervisors or specialized departments. This systematic process ensures compliance, mitigates risk, and builds long-term customer relationships based on trust. Question 20. Quality control measures reveal that a long-standing customer is requesting to open a new account for a business venture, but they are unable to immediately provide all the required documentation for business registration, as stipulated in the Postal Savings Bank of China's internal onboarding procedures and relevant PBOC guidelines for new account opening. The customer expresses frustration, stating they have been with the bank for years and expect a smoother process. What is the most appropriate course of action for the bank representative? Option A. Refuse to open the account altogether, citing the inability to meet the initial documentation requirements, and advise the customer to return once all paperwork is in order. Option B. Immediately open the new account for the customer, given their long-standing relationship with the bank, and follow up on the missing documentation at a later date to avoid customer dissatisfaction. Option C. Ask a senior colleague for an informal waiver of the documentation requirements for this particular customer due to their loyalty, and proceed with opening the account. Option D. Politely explain the bank's policy regarding new account opening documentation, emphasizing the importance of compliance with PBOC regulations for all customers, and offer to guide the customer through the process of obtaining the necessary documents, potentially suggesting a temporary hold on the account opening until full compliance is achieved. The correct answer is D. Politely explain the bank's policy regarding new account opening documentation, emphasizing the importance of compliance with PBOC regulations for all customers, and offer to guide the customer through the process of obtaining the necessary documents, potentially suggesting a temporary hold on the account opening until full compliance is achieved. Explanation. Scenario analysis. This scenario presents a challenge in balancing customer service with regulatory compliance. A customer is requesting a service that, while seemingly straightforward, could potentially expose the Postal Savings Bank of China, PSBC, to risks if not handled according to established internal policies and relevant banking regulations. The challenge lies in identifying the specific regulatory requirements and internal procedures that govern such a transaction, and determining the appropriate course of action without alienating the customer or compromising the bank's integrity. Correct approach analysis. The correct approach involves a thorough review of the customer's identity and the transaction's purpose against PSBC internal Know Your Customer (KIC) policies and relevant People's Bank of China (PBOC) regulations concerning customer identification and transaction verification. This ensures that the bank is fulfilling its obligations to prevent financial crimes, money laundering, and other illicit activities. By seeking clarification and adhering to established protocols, the bank demonstrates a commitment to regulatory compliance and responsible banking practices, which is paramount for maintaining trust and stability within the financial system. This approach prioritizes due diligence and risk mitigation. Incorrect approach is analysis. One incorrect approach is to immediately fulfill the customer's request without further inquiry. This fails to adhere to the bank's internal KYC procedures and potentially violates PBOC regulations that mandate verification for certain transactions. It exposes the bank to significant risks, including facilitating fraudulent activities or money laundering, and could lead to severe penalties, reputational damage, and loss of customer trust. Another incorrect approach is to outright refuse the service without understanding the customer's specific needs or the nature of the transaction. Caution is necessary. An unyielding refusal without attempting to gather more information or explore alternative compliance solutions can lead to customer dissatisfaction and may not be in line with the bank's service standards, provided the transaction can be made compliant. It misses an opportunity to educate the customer on the bank's requirements and potentially find a mutually agreeable, compliant solution. A third incorrect approach is to bypass established internal procedures by seeking a shortcut or an informal approval from a colleague. This undermines the integrity of the bank's control framework and creates a precedent for noncompliance. It also fails to ensure that the transaction is reviewed by individuals with the appropriate authority and expertise to assess regulatory risks, potentially leading to errors in judgment and increased exposure to regulatory breaches. Professional reasoning. Professionals should approach such situations by first understanding the specific request and its context. They should then consult relevant internal policies and external regulations. If there is any ambiguity or potential risk, the next step is to gather more information from the customer in a polite and professional manner. If the transaction still appears to pose a risk or falls outside standard procedures, it should be escalated to the appropriate department or supervisor for further review and guidance. This systematic approach ensures that decisions are informed, compliant, and aligned with the bank's risk appetite and ethical standards.